Ladies and gentlemen, welcome to another video. Thank you for spending your Sunday with me, or whenever you're ending up watching this. Grab a cup of coffee. We're going to talk about some things I'm looking at going forward into next week. Some things I could have done differently last week, though some of them were unforeseen, as you would probably imagine. And also, I want to thank everyone that has subscribed. We have surpassed 2,000 subscribers. That means a lot to me. That was the goal. Next, I guess, is 3,000. So I really do appreciate it. If you like this kind of content and you haven't subscribed already, consider doing so. I'm trying to make the content better every video, and hopefully you're enjoying it, if nothing else. And if you're wanting some more supplemental information, I have a course that is concise and it goes over everything I know when it comes to making money selling options. And I'm continuing to add to this course. So it's linked down below if you want to go check out this and help out the channel. I do appreciate it very much. In terms of how the month has played out so far, we're up in premium, or in premium we've made $2,452. And this is shaping up to be one of the better months, if not the best month, of me selling options. Though that does come at some risk because some of my covered calls that I sold before the old bait and switch of the tariffs are in the money. And we'll talk about what I'm going to do going forward if things continue to recover. But if we just look at how much I've made in premium broken down by ticker symbol, we can say I made $651 from Robinhood stock, only $23 from Chipotle, because there's only one covered call that I sold, which I also bought to close. $51 from MSTU, $356 from Nvidia, and then $650 from SoFi, selling a lot of covered calls and a few puts thrown in there. And then from the SPY, selling all covered calls, and this one should be marked as no, $617 in premium from those, and $104 from selling calls on TQQQ. Something I did last week that was unfortunate is I sold a lot of calls on Robinhood stock before we announced that we weren't applying those reciprocal tariffs to a lot of countries, which made the stock go up. And that's unfortunate because I really broke my own rule when it comes to if things are super volatile all of a sudden, just selling a few covered calls at a time and leaving the rest of the shares open in case the stock were to recover and the stock goes up, and then I can sell those covered calls then. I ignored that personal rule because I got greedy and I wanted to make a lot of money selling these calls for premium. And now a lot of these calls I sold are in the money. But I think we saw this Thursday, but the stocks did recover some on Friday. I don't think we're out of the woods yet, and I would kind of expect a volatile week coming up as well. Because just like before, and what's causing all of this decline in the market is uncertainty. And I don't think there's certainty still just because we called off a lot of those reciprocal tariffs. Things are still up in the air. No one seems to know what's going on. And we're still, in a trade war, so to speak, with China. So who knows, maybe Robinhood will dip at some point next week and I can roll a lot of these calls at a higher strike price into a further expiration, make some good premium doing that roll and also getting out of the money. Or better yet, maybe Robinhood just dips the entire week and all of these just end up expiring worthless. But if the opposite happens, I'm just going to do what I do when my options that I don't want to be exercised, that I'm just trading for income specifically. I'm just going to do what I do when they're in the money, and that is rolling the positions. So for this one, for instance, this $43 call option that is currently in the money, maybe I'll roll it out to May 2nd. And I can roll it to $46, which is $3 more than the current strike price, and it's $78 extra in premium that I'll gain from doing this roll. So to me, it's like a win-win. I roll it up in strike price, I give it more time to play out, hopefully in my favor, and I also make some extra premium doing so. So I'm not worried, I'm not concerned. I'll see what the week brings and just make my decision from there. And then lately, I've been selling just specifically covered calls. I haven't really sold many puts. And so now I'm wondering if I should look at continuing to go back to selling maybe a couple puts at a time just because the markets are still down, and when markets are down it's typically a good time to sell puts. So if I look at SoFi, for instance, not that I need more SoFi shares, so to speak, but just for this Friday, I can sell a $9.50 put and make $15 in premium, which is wild to me. And then since a lot of these SoFi calls that I sold that expired last Friday have now freed up a lot of the shares, I can look if SoFi goes up at some point next week, selling more covered calls on SoFi. So my average cost is around $12.50 per share. I know the premium is only $4 a share, and I wouldn't get any capital gains if these were to get exercised. But if SoFi were to go up and I were to sell covered calls on this, hopefully it would be more than $4 a piece in premium. I have 3,300 shares that I could sell covered calls on, which I wouldn't do all at once, but just at this $4 strike, $130 in premium, which isn't too great. So that's why I would wait to see if SoFi goes up at some point next week. And if so, then I could take the opportunity to sell some covered calls. And that's pretty much it. Aside from this, I'm continuing to invest in some S&P 500 index funds and a couple mutual funds back in my main portfolio. And just business is normal. Of course, I will be making videos throughout the week, so no matter what the market does, you can follow along, and we'll see what the week is going to bring. Hope you all are doing well, and I hope to see you in a future video.